This is Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today we're going to be talking with Lindsey Rubinstein. Lindsey is a senior executive responsible for marketing and investor relations, as well as helping with product development and strategy for the separately managed alternatives affiliate of a New York-based family office. Previously, Lindsey was the Chief Administration Officer, Chief Marketing Officer, and EVP of American Farmland Company, which is a REIT that's listed on the New York Stock Exchange. Prior to that, Lindsey has held roles at Rabadi & Company, Optima Fund Management, D.E. Shaw, TIA Cref, and Goldman Sachs. She received her BA with distinction from Cornell University. So thanks for being here with us today, Lindsey.
Thank you for having me, Rob. I'm excited to be here today. And thank you for hosting, and thank you, Chris.
Yep. So I guess I'd like to start with how has the wealthy family that you work with and other allocators in your orbit begun thinking about DEI within the auspices of their long-run planning?
And that's so helpful. And first, let's define the acronym, because many of our listeners might not even know there's so many acronyms that are thrown out there.
Yep.
Diversity, equity, and inclusion. And throughout our conversation today, I want to be able to talk about it both through my lens at the current family office, a multi-billion-dollar allocator, and the other allocators I've been aligned with, but also from a corporate perspective and, being a woman involved in an organization. And also from an individual human and investor perspective, because all of those are relevant to the issue. To take a step back, investment allocators tend to be, for right or wrong, among the most influential in our community, and many of whom are part of the CFA Society. We have a real opportunity to engage in a timely dialogue and connect and resonate with those who are listening to aspire to be a part of this community and take and build from here, and B, think of best ways to catalyze change from these acronyms and what to do action-wise from here, so we can set the tone for what matters. Throughout my career at allocators, most, currently with this great family office, but both institutional and family office, as well as through other direct hedge funds, as you mentioned, and other institutions, I've seen both sides of the investment decision across my market cycles. And I use cycles loosely because markets evolve, as do allocators' views on those cycles. And acronyms like DEI shift as markets evolve and their inclusion therein.
Sure.
So it's important to have a real-time pulse. And I get to see both the ideas coming in and the ideas flowing out. So I think to start on the conversation, I want to take a step back and, to use another acronym, look at DEI's closely related cousin, ESG,
Right.
Environmental social governance. And here, if we can all reframe ourselves back to 2008.
Mm-hmm.
For some of us listening, this might be a history lesson. You were in college or in diapers, I don't know. For me, I was working at a fund of funds at the time, and some of the terminology was mostly weighted, I would say, loosely initially embraced through the concept of socially responsible investing. We would manage accounts for individuals that just wanted to exclude certain types of investments.
Right.
Tobacco or sectors
firearms,
or certain governments that were misbehaving.
Mm-hmm.
And then, it kind of, as the dust was settling in 2009, and there was this whole view that backdated stress tests that told us all investments would forever do well, even those that embraced socially responsible investing, and elements of ESG might need some tweaking. There was a new focus on how alternatives investments and uncorrelated investments really could bring in and implement at every level of the three I mentioned at the outset, these, ESG ingredients. At the same time, the UN was talking about their principles for responsible investing.
Yep.
There was a lot of early heavy confusion and probably an overemphasis on the environmental as opposed to the more social and governance.
You're right. Although that was sort of regional, right?
Yes, certainly regional in the US. I think in other areas, right, in Europe, certainly it was more broadly adopted that it was more social and government from the top down.
Right. In the US, it was mostly the G.
Yes, yes. And from an investment perspective, a lot of folks were at least thinking the easiest way to tweak their portfolios, which now we talk about as greenwashing, putting a quick green layer on the way we invest by selecting stocks that might look good or do benefit the economy, was to invest in that manner. I think since that time, there's been a view that all of those elements should be weighted more equally. And
Hmm.
right now, I'm going to focus more on the investment from an allocator perspective, right? So, as an allocator, how can you invest? So, when we think about it from a family office perspective, whether within my current role or others, is it finding those investments that have attributes that, specifically benefit the environment,
Hmm.
coming up with a ranking system. Is there room for someone who prefers to invest in really not what seems like DEI or ESG friendly companies? Can an investor who likes to invest in oil,
Right.
could that work?
Right.
And I think that's where you really see the multidimensionality of the social and governance aspects.
Hmm.
For one to say that just because you're not investing, going back to 2008, we conceived of a farmland company,
Right.
based
Right.
on the environment at the time, and it was a large industry that was misunderstood by Wall Street, uncorrelated to many asset classes that had all, correlated to one in the financial crisis. But, shortly thereafter, I came across a hedge fund manager who really heavily invested in really cyclical microcap oil companies, but constructively
Hmm.
actively.
Hmm.
Would get involved with the management, try to make changes for the best benefit of the shareholders,
Right.
and there's a role for that within that framework as well. So in terms of the thinking, and the evolution, I think there has been a somewhat fluid and somewhat disconnected transition from this view on ESG, how massive it is, how to measure it, how to bucket it, into more of a DEI, diversity, equity, and inclusion platform that is more easily implementable, both at the corporate level and also in the investments, the managers you're choosing, the companies you're choosing, how they're managed, how they think about investments. I think it's easier for many to integrate within their corporations and companies.
So when you're talking about this with the different asset allocators, what level are they putting this in their investment program? Does it start at the investment policy level, or is it just at the allocation level, or is it a screen that we use later?
So it varies, and here, I'll speak a little bit more from the family office perspective, because I do think coming from a larger, what you see across many of the larger pensions that allocate, there's a lot of more group shared knowledge and think and
Right.
frameworks.
Right.
And so from that perspective, I do think it comes from the investment policy committee, the IPC level, and filters down from there, and it probably even starts from the top.
Yeah.
Right? Who are we hiring to broaden our view, our lens on these conversations? So there'll be more hiring of, minority women, different types of perspectives that influence the IPC that trickles down to the actual investments and allocations. And for the larger pensions, that becomes more of a global framework or roadmap for the actual investment decisions. Family offices, and if we think back to Forrest Gump, and I didn't think I was going to think of this at all. But life is like a box of chocolates. Family office is. I know there's so much attention today to this view of this. Is it 60 trillion, 84 trillion global wealth transfer that's
Yes.
happening by 2045, and
Yeah.
all of this focus on family offices as though they were like family office, like
Right.
one.
Right. One
But every
family.
family office is actually very different.
Uh-huh.
Navigating this transition, it's very real. It's happening within family office, where I'm currently aligned, and with family offices that I have the benefit of speaking to every day. And the way with many institutions, a lot of these, RIAs, these, investment advisors want to, associate with family offices. It's all around this notion of wealth transfer, but it really comes down to where family offices are in their wealth creation cycle and the return attributes they're seeking. And
Okay.
therefore, it comes back to how they're including and where they're integrating at the top level, middle level, or as a screen, concepts like DEI, right? So the more well established family offices that tend to be more institutional will have more of that pension like look, where it's more in the IPC level.
Yeah.
And other families that are really focused more bottom up on return attributes, right? Those that maybe have their source of primary profitability from real estate or other business, or Silicon Valley tech bubble, and really what they're looking for is to haven't really thought about before how to provide and protect for this legacy that they're creating with their children and subsequent generations. It's return attributes. And so therefore then it becomes, how are we choosing to include more diverse investments or companies, managers, however we define the investment framework, into those return attributes we're seeking.
Okay, so let's talk about those for a second because in
Sure.
many ways, one of the things I think is interesting about family offices is they don't have a board to ask to do all this stuff. So they don't have the same impediments that endowments have, for instance. Like
Right.
they can go, bang, we're doing this today. So I guess one of the things that occurs to me that's difficult about this is the manager search and selection process. So, are there any best practices you've seen out there within the manager search and selection process at family offices of that ilk that you use that are in that wealth creation phase?
Sure, and I will say, whether it's a board in a corporate setting, I agree. There's boards, there's committees. Sometimes there's so many committees that it gets away in other committees and actual decisions. Your
Right,
family office life, in some senses, is a lot freer in that
right.
context. However, just like you squabble with your siblings, there's also family hierarchy that
Yes.
there's some decision making power,
Yeah.
and committee that is more institutional and framework, so that things are done correctly and for actual decision making purposes. So I don't want people to take away from here the view that there is no kind of board like framework at family offices. Many of them today do,
Yes,
but
comparatively.
comparatively, it
Yeah.
is a little bit more flexible. But, in terms of making the investment decisions, what you're seeing is an evolution in the family office industry, okay? And I will talk from two perspectives. I'll start with a family office like Opus, where we're the separately managed affiliate of a large real estate family, and we focus on the, alternative investments. We have a dedicated team. It's not at all dissimilar to when I was working at the multi-billion-dollar fund of funds,
Mhm.
or any other institution in that respect. Although, committees are called differently, but we have the same institutional caliber for decision making, the same checklists. We hold ourselves to the same caliber, and closely monitor and have very good access to our investments. Some would almost argue with a family office, you might have better access to some investments because we've some of our investments we've known them before they're who they are now,
Right.
right? So
Right.
we give them a call, but really with other family office, and you look at the other end of the spectrum, there's emerging wealth, and there's a whole component of emerging wealth that also want to be able to invest in an inclusive manner, and also want to have a complete investment program that's diversified, that also can invest in managers that have minority or women ownership, or other investment attributes that are attractive in that vein. But they don't necessarily have the ability, or the capex opex, to hire a staff to full time due diligence manager and monitor. That's a whole program.
Right. And it's
That's
expensive, right?
expensive, timely, and costly.
Yeah.
It's a. That's why we have a separately managed affiliate for it,
Exactly.
right? And a lot of those families, what they're aligning with. I'll take a somewhat of a step back, but there's been somewhat of a trend which many who are listening may be a part of, or servicing, being a service provider that's part of, but the RIA industry and the M&A in the industry. So a lot of the smaller advisors are being acquired and becoming part of these larger, institutions. And there's a huge component within these larger RIAs now. They're now several hundred million, if not several 100 billion,
Mhm.
that want to provide family office services.
Right.
And there are also smaller ones that have not been acquired, don't want to be acquired, that are providing those. And for them, they're almost effectively acting as the OCIO,
Right.
whether they have, and I'll use it, the GTA, Global Tactical Asset Allocation Program, or essentially just coming up with, the resources to help direct and steer families towards making those types of decisions based around the return attributes that are inclusive of DEI principles.
Right. Yeah. I mean, this is fascinating. There's this whole evolution of the outsourced CIO role. When you take it from those folks to the more one's been around for a while, like Vanguard. So it's an interesting world that perhaps is a different podcast because you've been doing this for a lot longer than a lot of the people who we talk with here at CFA New York. I'm also keenly interested in what you think is coming next within DEI. There, it's is it better data, better insight, better benchmarks? What do you think is next for this corner?
I think there's abundant opportunity. And here I'm going to take a look at it from there's interest thankfully, from the top level, the allocators. So family offices, endowments, foundations, pensions that really have a strong view,
Mhm.
that have made the right corporate decisions to hire those with diverse minds to want to have an investment framework that incorporates DEI, right? So it comes from the top there, and they're building out programs that seek out managers that aren't only seeking out folks for sake of checking a box, but actually delivering on the return attributes, but maybe would have under a different lens been passed by.
Mhm.
And from the other perspective, there, if we think about the managers that are, building companies and trying to pitch to allocators like family offices and institutions, there is almost every company we speak to, whether at a conference, family office symposium, dinners that we have all the time. There is a view of constructing companies based around from every level I spoke about, the corporate level. Are we hiring the right people for the right diverse mindset? We're making the right investment decisions, and the investments that we're making could be an oil company, could be
Right.
farmland,
Right.
but do they have resonance that actually makes sense on some sort of socially responsible, attribute there? And the third, perspective I'll bring, which we haven't talked about yet, is the new investor that's coming in. We think about this great wealth transfer and that huge $1 trillion number, which I'm sure I misquoted, but it's something big.
Whatever
Yeah.
they said, it wasn't right
But
either.
so much of that wealth is gonna be comprised of spouses that tend to be female,
Uh-huh.
that are inheriting wealth and are changing the way investment dollars are gonna be allocated, the new face of the family office,
Uh-huh.
and burgeoning, wealth in emerging economies. The new face of family offices, endowments, and these allocators is more minority driven.
Mhm.
And that in itself will drive the other side of how DEI is going to be implemented going forward. Really, what I think it comes down to is in the same way, we've always thought about investments and legacy as kind of disconnected but loosely related.
Mhm.
I think we really need to think about investments as wealth and thinking about a wealth span
Mm.
that transcends generations. And I think that's the evolution, that the next logical evolution we're going towards.
Oh, wow. That's fascinating. Perhaps we could leave it there because it's a very bright future you've pointed out there with nice coalescing of the different roles, et cetera. So thank you for being here, Lindsay, and thank you for giving us a view into this.
Oh, well, thank you for having me. This has been wonderful, and I look forward to engaging with you again soon.
All right. And thank you for downloading this podcast. If you'd like to hear the others, you can find it on any podcast app of your choice. And we'll see you at the next one in 1 week. Until then, I'm Rob Rowan. Sorry to break up your listening to your next podcast, but it's Rob again. We're back because Lindsay has been very generous in making a little offer to you. Lindsay, could you say a little bit about the meeting thing we just talked about and why you want people to reach out to
Absolutely. Here's a snapshot into our blooper reel after the
you?
podcast. Thank you, Rob, and the CFA Society for making this so conversational. Really, it's been so nice to share the views, from my experience and perspective. But what can we do from here? And I really want to invite everybody who's listening, if anything's resonated, to take the meeting, make the meeting, connect. Find me on LinkedIn, find Rob on LinkedIn. Let's continue the conversation and really catalyze some change here. I want to hear your views, what you're doing, and how, as an industry, we can integrate DEI and other topics into the conversation. So, thank you again, Rob.
Thank you, Lindsay, and on to your next podcast.